Ladies and gentlemen, coming up on today's show, markets keep climbing the wall of worry. Nvidia is the world's first $4 trillion company. EU has a trade deal on the way, and Bitcoin is starting to make its move. We've got a lot to talk about. Let's roll the tape. Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks rose on Wednesday despite Donald Trump's tariff threats and the release of the FOMC minutes. And guys, there were winners, there were losers, but mostly winners today because the mega caps moved higher, and because of the index weighting effects, when they move higher, the market as a whole moved higher. And that's why the S&P 500 was fairly positive today. You could see Microsoft, Nvidia, Google, Meta, Amazon, all very, very green. And that helped overall sentiment today, but it wasn't all green. Software application, or just software in general, CRM, ServiceNow, Intuit, Uber, Adobe, they were kind of red. Consumer defensives was also red. Defensive stocks as a whole, for example, look at telecoms, are fairly red. A couple of names in healthcare plants, and then the energy sector was also red, and that was really it. Other than that, stocks were fairly resilient. Only a couple of sectors actually fell today: staples, energy, real estate, and they were down, but the majority of sectors were up. Everything from utilities to communication services to the discretionary space, with even gold catching a little bit of a bid, up 0.42%, and the S&P 500 gaining 0.6%. And you can see we were actually very bullish coming into the day right here. However, as the day moved on, we paired some of those gains, put in a bottom mid-afternoon, and then sort of rallied into the close. Net still up on the day, a very positive day. It was really just a day for growth, large cap growth, mid cap growth, small cap growth, very, very positive, but also small cap core putting it in there, with the only red factor being mid cap value, and it was actually just pretty much flat today, down 0.05%. Now, the US stocks were pretty green, but the best performing geography was definitely European stocks. And that is because the European Union came out and said it plans to finalize a trade deal with the United States before August 1st, possibly within the week. So that is going to be some positive momentum we are going to see with regards to trade deals. However, it wasn't all good news. Right after the close, Trump came out and announced a 50% tariff on Brazil, simply because they are not playing ball. But the EU is a massive trading partner. This is ultimately what drove sentiment today, along with the FOMC minutes, which was released on Wednesday afternoon. And it showed a couple of officials at the June meeting supported an interest rate cut as soon as this month. Quote, most participants assess that some reduction in the target range for the federal funds rate this year would likely be appropriate. The minutes said, noting that upward pressure on inflation from tariffs may be temporary or modest, that medium and longer term inflation expectations had remained well anchored, or that some weakening of economic activity and the labor market conditions could occur. The minutes released on Wednesday afternoon gave investors a glimpse at what the Fed officials may do when they meet later this month. The market currently forecasts that a rate cut would not come earlier than September, despite President Trump's vocal calls for Fed Chair Powell to cut rates, also calling him too late Jerome Powell. And so these two big events is ultimately what drove the sentiment today. We saw some positivity with regards to monetary policy. We got some trade momentum, especially with the EU. And when you get that, stocks are going to be fairly bullish, especially given this market environment. Now, looking at some market movers, Nvidia at the 162 mark, up 1.81%, and Nvidia is officially the first $4 trillion company. Absolutely insane. And there was a bunch of banks that actually raised Nvidia's price target from $162 to $200 per share. Amazon was up 1.36% today. Now, with release of its Amazon Prime Day, there's news going around that Prime Day sales fell 41% versus the same time last year. But Prime Day is no more a day. It's more like a week now. So you're going to see those sales spread out over a week. So that headline was largely a non-event. And I think the biggest news with regards to a stock today, excluding the trade stuff, came from Novo Nordisk. Now, the stock was pretty much flat, but Novo Nordisk actually lost its patent in Canada. It was supposed to pay a $250 patent renewal fee. It did not do that. Now, this is absolutely crazy. I have no idea what the management team is thinking. I don't know how this is an oversight. You think $250 is all you need to protect your $500 billion moat that you have in these GLP-1 drugs, but here we are absolutely crazy news when you really sit down and think about this. And then guys, Bitcoin today officially hit an all-time high, 110,000. We were super bullish. Guys, we've been buying Bitcoin at the 70,000 level. To see this all-time high is absolutely insane. And then for everything we saw today, it was 3,800 advances, 4,200 decliners. We saw net outflows in the Nasdaq and the New York Stock Exchange. The S&P 500 still gained, however, very interesting, and market momentum looking very solid from the 5-day to 200-day. We're above the 50% mark. Guys, this is not a reason to get bearish. This is actually a reason to get incrementally more bullish, simply because market breadth is expanding. Now, guys, diving into the charts, you can see a fairly green day through and through, but ultimately led by small caps, high beta, the IWM up 1%. Mid caps also outperformed, same with small caps. We could see the extended hours looking largely mixed. Despite the 50% tariff on Brazil, the market largely just brushing it off. We could see nothing really happening in the extended hours. European stocks were very, very green. The best performer here today, Middle Eastern stocks actually outperforming European stocks, up 1.68%. Australian stocks down, China stocks down. Volatility, spot volatility was down. Front month volatility is up. So the market's seeing less near-term volatility, but in the longer term, do expect some turbulence. And then as a result, we actually saw the 2-year, 10-year, and 30-year yield fall. And that's probably on the back of the FOMC comments. We got the dollar largely flat at the 97,000 area. It does look like it's finding support at this 96,000 area. We'll talk about it. And then Bitcoin was up 2%. Very, very solid move. Ethereum is higher beta than Bitcoin, up 5%. Gold kind of flat, up 0.3%. Silver down big. WTI flat. But let's talk about the S&P 500. Guys, we've been following global M2 money supply to track the position of Bitcoin and the S&P 500. And you could see right here that we are set to actually move higher in the S&P 500. Look, a year-end target of about 6,800. Now, don't get me wrong. We are expecting a little bit of volatility here, as you can see, but the path is ultimately what we want to look at. And the path of least resistance is for us to move higher. So any dips we do get possibly to the 6,100 area, buy those dips, because dips in this market are short, shallow, and sweet, especially with our breadth momentum, especially with our breadth and momentum indicators. Those short, shallow dips, be proactive, get long, and just sit through the volatility, because the path of least resistance is higher for the S&P 500. If we go ahead, just hide this, reset this chart, and then we actually go to normal candles, go to the S&P 500, we could see that we are pushing again at the top end of the call wall, at the top end of the range right here. There's a little bit of momentum to the upside. We'll see if we're going to go ahead and retake it. That being said, if we go ahead, touch the call wall, and the call wall, this blue line, doesn't move up, that probably means we're going to see a little bit of resistance here at the top end, maybe to cap the week off. To end the week, we see a little bit of resistance at the top end of the range. And then maybe we go ahead and test some of these lower levels, the 6,200 area. However, if the call wall does move up, right, then we can definitely go higher. So in the near term, we could see a little bit of volatility if the options market doesn't move higher. However, if the call wall does move higher, we probably will see higher price action in the S&P 500 as well as the Nasdaq 100. You can see we're right at the top of this range. So maybe it is time to get a little cautious right here towards the end of the week. But longer term, even in the medium term, you do want to remain constructively bullish. Let's quickly look at the RTY, something we haven't looked at a lot. You can see that there's still a lot of room to get to the call wall right here. So ultimately, guys, we could see a little bit of a momentum hold in some of these larger cap names like the S&P 500 and the Nasdaq 100. And we can see a continued rally in stuff like the RTY, just because there's a lot of room to run. The options market expecting the Russell 2000 to see a big move before the options expiration, which is in a couple of weeks from where we are right now. Looking at the ISRA ETF, it just keeps moving higher, up 1.68% today. We're looking for a pullback to the 47 area. Does not look like we're going to get that anytime soon. KWEB, I still think buying at this 33.50 area is a great place. Looking for the $38 area. And then quickly, European stocks, we said to be buyers right here, in between this box. And it has been a good run for European stocks. Ultimately, if we can go ahead and take these highs right here, we can open up all-time highs at these levels right there. So very, very interesting. European stocks looking like it has momentum, and stocks in general looking like it has absolute momentum. Now let's actually look at the DXY. It does look like we're sort of putting a bottom in here at the 96,000 level. Ultimately, we need to go start taking out highs at the $99 area, but that's going to need to coincide with stronger economic data and maybe some trade deals, then we'll see some strength in the dollar. But do understand that there is some tailwinds to the dollar right now. The TGA is currently being refilled as the big beautiful bill, as that money comes into law. The TGA needs to be refilled. What's been happening is that the Treasury has been draining the TGA to fund the government as this new bill was taking its time to get passed. The TGA is a liquidity injection. It weakens the dollar. Now that it's getting refilled, you should see the dollar strengthen a little bit. Now, quickly looking at bonds, guys, you can see the TLT looking very, very solid at these lows. I think if we get to this 84 area, that would be a great place to buy, especially if we do get rate cuts for the rest of the year and stuff like the 10-year yield. It does look like we are putting in another lower low, and you can clearly see the trend that's going on right now. Let's actually go ahead and you can see from this high right here, there's a very, very clear downtrend that's happening, and it does look like we are going to continue this downtrend. And what we need to do now is take out some of these lows at the 4.2%, 4.1% level, and then we could say, we're clearly in a downtrend. But yields are probably going to go lower, especially as we get rate cuts for the rest of the year. Let's quickly go ahead, look at gold. I don't want to talk too much about it. You know what's happening. We're going to trade inside this range, and we're looking for a break above or below these bullish lines to make our next move. And then Bitcoin, massive surge today. In fact, if we go to the one-day chart, you can see the surge came right at the end of the day, pulled a bit back, holding these upper levels. Very, very solid stuff. And ultimately, what this means for Bitcoin, right? That's an all-time high, not a close, but a wick all-time high for Bitcoin. Ultimately, this is really, really good because we were in a very clear downtrend. As you can see right here, we made lower lows, lower highs, but we broke above it, now making a new all-time high. We can then actually go target the upper end of the range, being 140, possibly 135,000. You can see global empty money supply is telling us Bitcoin will go higher. Bitcoin and empty money supply track each other very, very closely, far more closely than what the S&P 500 does. But you could see that we are expected to go higher. And I think today's rally towards the end of the day was a signal that that's going to come sooner rather than later. So guys, have exposure to Bitcoin. I was saying you want to be a massive buyer right here. I said to add exposure at these lower levels, and now we are going to move higher. And we could see Bitcoin rally 30-40% in the next couple of weeks, possibly into as late as November, while all of this money supply finds its way into risk assets. Guys, and diving into sentiment, this is the fear and greed index, and we've officially moved from the extreme greed zone into greed territory as we've had some trade policy uncertainty that has come with stocks very frothy at all-time highs, coming off what has been an excellent rally in the last 3 months. Like I said on Monday, guys, when we get to extreme greed, this is actually where you want to start trimming, holding some cash, looking for opportunities to get in. And I do think we are going to see a couple of those opportunities occur in the next couple of weeks. But you definitely still want to maintain exposure to risk assets, stocks, Bitcoin, everything in between, because the path of least resistance is still higher. Guys, this isn't a reason to get bearish at all. It's actually a reason to remain constructively bullish. And here's exactly why we have seen a little bit of volatility. 3 days coming into the 4th of July, generally speaking, 3 days after, we do tend to see quite a bit of volatility. You can see that the average return tends to be in aggregate positive, but we do see days of volatility, both of the average return and the median return, and the hit rate tends to be fairly low in the 50% range. Generally speaking, you want it above, the 65, 70% range for it to be viable. So do expect continued volatility for the rest of the week, but you do want to maintain exposure, because when you look at the very long term, 12 months down the track, after a 25% advance in less than a quarter, we tend to see returns 12 months later that exceed 30% on both the average and median return. Now, there is only 5 instances here when that has happened, so take it with a grain of salt. Nonetheless, the data is the data, telling us to expect higher price action as we go. And what could definitely help us move higher is the earnings picture. Q2 earnings season officially is in gear. We've had 19 companies report, none of the big ones. We're looking at about 5.8% earnings growth so far for this earnings season. I think coming into this earnings season, we were looking for about 5.4%. So we're slightly beating 3.7% in revenue growth. And if we can get like another double-digit quarter, stocks will continue to move higher. So right now, everything is on earnings. We get banks this week, a couple of the tech names next week, and over the next 4 weeks, that's really going to determine where we go next in the S&P 500. Do we continue to consolidate, or do we make our way to the 6,600 area? So watch earnings, watch the beat rate, watch revenue, and you will find it all on this channel. So go ahead, like and subscribe so you never ever miss a beat. Now, what's also going to help the market is the macro, guys. And yesterday we got the rent book index. This is a weekly aggregate of retail sales, accelerated to 5.9% from the week prior. Very, very solid stuff. And even though we are trending down, we're still above like the 4.5% mark. So the consumer not pulling back. And that's because the consumer has cash federal employment tax receipts for the month of June at 5.9%, 6.1% here for the last 12 months. Very, very solid stuff. And that is telling you if tax receipts are high, employee compensation and disposable income is likely high too, especially as inflation, PCE is at the 2.1% mark. We're also collecting a ton of money from tariffs. Annualized tariff collections are at about 400 billion, which represents about 1.2% of GDP. Very strong stuff. And that could help offset some of the spending we should see in the back half of this year. Guys, looking at data for the rest of the week, we get initial jobless claims. So another barometer for the labor market. The forecast there tomorrow is for 260,000. And then in terms of earnings, we get Delta before the open, Levi's and WD-40 after the close. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.